Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. This time we are diving into Penske Automotive Group's latest annual report. It's a long document, but trust me, there are a few surprises that are worth knowing about. Let's just say some supply chain hiccups were more like speed bumps in a parking lot. Alright, buckle up because we're diving straight into Penske's numbers for the year that ended in December 2024. Penske's is massive. They aren't just selling cars, they are selling commercial trucks. They are in distribution and they have fingers in all sorts of transportation pies. Okay, so in 2024, they raked in $30.5 billion in total revenue. Most of that came from car dealerships, about $26.2 billion worth, with over half of that revenue coming from the US. They run a ton of dealerships, hundreds in the US, the UK, and even spots in Germany, Italy, Japan, and Australia. They also have used car dealerships with names like Car Shop, Sytner Select, and Penske Select. Here is a bit of a twist. Some dealerships are using something called an agency model, meaning they don't even hold the cars in inventory. They just collect a fee for connecting the buyer to the manufacturer. They also generate a significant revenue from maintenance, repairs, selling finance and insurance products, and even collision repair. It is not just about selling cars, it is about all the services people need. Then there is the truck business, which is a different beast altogether. The number of trucks on back order totaled 213,366, which is a key industry metric to consider. Outside of dealerships, Penske is also a major distributor of commercial vehicles and engines in Australia and New Zealand. Finally, they own a big chunk of Penske Transportation Solutions, a business that manages a massive trucking fleet and supply chain solutions, giving them even more diversification in the transportation world. Alright, so what's the outlook? Well, new car sales in the US increased slightly to 16 million units. The UK also saw an increase, but not as high. Electric vehicles are also making waves with sales increasing, but it is not a sure thing and can be affected by government incentives and consumer preferences. On the truck side, things have been a little bit weaker with a slight decrease in sales due to a weak freight market. Let's talk about corporate responsibility. Penske claims it is committed to a healthy environment, economic opportunity, and social equity. Penske seems to think its people are its greatest asset. They highlight that many of their dealerships were named as the best to work for. They state they have a turnover rate that is below industry average. They operate in a highly regulated industry and things like emissions and safety are a big deal. Recalls can really affect business because they can't sell vehicles until the problems are fixed. Government regulations on emissions are only getting stricter, which could force them to sell more electric vehicles. Now, for some risks to be aware of, they state their performance is strongly tied to general economic conditions. High inflation is bad. International conflicts can affect the vehicle supply chain, which has already happened with the war in Ukraine. The UK is investigating the historic use of discretionary commissions, and this could also be bad. They are heavily dependent on vehicle manufacturers. If any of those manufacturers have problems, Penske will also have problems. If consumers start to think that the brands they sell are not high quality, that could also hurt their business. The retail landscape is shifting with more online competition from companies such as Carvana. There is also increased digital retailer competition and pressure from manufacturers to sell vehicles directly. They highlight centralized information systems are a big risk. A cyber attack can disrupt everything. In fact, they were impacted by a CDK Global cybersecurity incident. There are a couple of ownership risks. Penske Corporation and Mitsui together own a big chunk of Penske Automotive stock. Their decisions could really impact the company. There are also a few executive orders from the US government that seek to rescind the electric vehicle regulations. If you had invested $100 on the last day of 2019, you would have seen your investment more than triple compared to a reasonable double for S&P 500. While there have been claims and legal proceedings that affected the company from time to time, they are not expected to have a material impact on the company. As of the end of 2024, Penske employed over 28,900 individuals, of which 683 were covered by collective bargaining agreements with labor unions. To be sure, Penske appears well run at a corporate level. It is governed by the board, which is charged with making sure the cyber and other risks are kept in check. The management team also has certified cybersecurity experts in their ranks. However, the report notes that the laws are always changing and the business may need to adapt procedures to fit evolving legal requirements. Another important risk is that because one entity owns so much of the stock, if there is a default by Penske Corporation, the share price could suffer if the stock is sold on the open market. Interestingly, even though the CDK cybersecurity incident impacted PTG, the Premier Truck Group was able to respond with business continuity plans. Lastly, it notes that they have a significant amount of shares of common stock that may be eligible for sale. The CODM or Chief Decision Maker team reports to the board and audit committee to ensure governance. Tariffs and trade restrictions could broadly affect the automotive industry and make selling their automobiles non-profitable. Based on everything we have decoded, Penske appears to be in a relatively strong position for the coming year. However, it will need to demonstrate its ability to adapt to higher interest rates and adapt to economic forces, as well as consumer preference shifts to EVs while managing existing brands and parts. Based on the information, a reasonable price range for Penske would be between $120 to $150, assuming the company manages external conditions well. Thanks for watching Corporate Decoder. We hope that you enjoyed this. Remember to subscribe for more deep dives into corporate filings.